Good afternoon, everyone. Bon après-midi à tous. My name is Liz McCleave, and I'm the Director of Communications with Vestcor. I'm pleased to join you to moderate part 2 of our Q&A session on behalf of the Board of Trustees of the New Brunswick Public Service Pension Plan. The Board of Trustees held their annual information meeting on September 24th of this year. So many great questions were provided by members, but we unfortunately ran out of time to answer them all, so here we are today to do just that. Starting off today, we have Sean Hewitt, President and CEO of Vestcor, who's joined us to answer several of your questions. Thank you for being here, Sean, and welcome.
Yeah, thank you for having me, Liz. This is the fun part of doing these annual information meetings is interacting with members, and it's just great to see that we got all sorts of very good questions, and we're happy to get to them all. I think that it's a lot of fun to dive into the details and to answer the questions that our members have.
Completely agree. Thank you, Sean, and thank you for being up for doing this today. I will note that the questions that we received from members included in this presentation are presented as they were received. They were not edited. And this presentation, of course, is for information purposes. So there are no rights conferred by this presentation. Refer to the member booklet. If you have additional questions, contact us. Don't hesitate to, but we will do our best to answer your questions as clearly as possible today. So first off, we received a question, how can I get a more recent or current asset allocation of the fund?
Yes, certainly, and we do post that in our annual report, the annual report for the Public Service Pension Plan, and in the spring newsletter. But here is a snapshot of the asset mix for the plan. And to find a copy of this, please do refer to the annual report, which is available on the website. The investments of the plan are very well diversified. The 4 largest components of the investment approach are in relatively lower risk strategies, such as corporate bonds, low volatility equity, real estate and infrastructure, and government bonds. But to round out the portfolio, we also have allocations to higher return-seeking investments, such as small cap equity and private equity. This is all subject to the risk-controlled nature of the investment policy. The investment policy itself determines the asset allocation of the plan. That investment policy, of course, is reviewed regularly by the Board of Trustees, and any changes to that asset allocation needs to be approved by the board.
Thank you, Sean. Next question was, I'm confused why the 4-year return is lower than last year's return. Did we have a few bad years in that 4-year period? And that was during the meeting, you'd shared the results from December 31st, 2024.
Sure. The answer is no. The plan has performed well over a 4-year period. That 4-year return number of 6.1 represents an annual return. So 6.1 each year for the last 4 years compounded over time, which has enabled the plan to increase its funded ratio, provide cost of living updates to members and pensioners, and has generally performed quite well relative to the asset allocation range that's articulated in the Statement of Investment Policies. Great question. Appreciate that.
Thank you. Next question came from John. I'm curious, what's the explanation for the relatively lower performance above benchmark in 2025 as compared to earlier years? And this is where we share the results at June 30th of this year.
It's another excellent question. The current 12-month period has been characterized by very strong stock market returns. Equity markets have really performed well. And we had another question, which is so far this year, the TSX had performed exceptionally well. The member made the statement that performed 20% year to date. Which was true for that time period, not through June 30th. June 30th, it's a little bit more modest, but the point still remains. Equity markets have really performed very, very strongly. And our strategies, our equity strategies, have also performed very strongly, with one exception relative to the benchmark, in that our private equity strategy has performed well on an absolute return basis, but has lagged that of the public equity benchmark. And we think that that's an appropriate benchmark over a longer time period. However, in this market environment, when equity markets are very, very strong, the private equity strategy has not been able to keep up. That's been offset by outperformance in other parts of the portfolio. So on a total plan basis, you can see that the portfolio return basically has matched the benchmark return year to date and over the 1 year period ending June 30th. But within that is, relatively weak performance in private equity compared to the public equity benchmark, which was offset by outperformance in other parts of the portfolio.
Thank you so much. Next question was again about speaking actually to benchmarks. Who decides the choice and suitability of investment benchmarks? And adding to that, what benchmarks are you using to compare the plan's returns to?
Another excellent question. The benchmarks are selected by the Board of Trustees and codified in the investment policy, the Statement of Investment Policies and Procedures. And that's a document that's available online. The benchmarks are selected for each investment asset class. For example, Canadian public market equities are benchmarked to the S&P TSX Composite Index, which is the broad stock market index in Canada. Canadian bonds are benchmarked against broad Canadian bond indexes, and real estate is benchmarked against a national benchmark of real estate returns. For additional information, including the individual benchmarks by strategy, please refer to the Statement of Investment Policies and Procedures, which is located online on the plan's website.
Perfect. Yeah, and that's NBPSPP.ca for anyone who wants to find that document. It's under governing documents. And again, it's called the Statement of Investment Policies, sometimes referred to as the SIP. So that's definitely where you can find the most recent version of that. Thank you. A question from Grace. The speaker, the chair of the Board of Trustees, spoke on the management costs of the plan and what keeps us up at night. Can you explain the decision-making in awarding extremely high bonus plans for the executive level, CEO, etc., members of Vestcor when reporting that our plan is not performing well?
Certainly. Happy to do that. And it's an important question. The one thing that I would say to start off the question is that the plan is performing very well. I believe that that's a misquote. I don't think that the chair of the board suggested or intended to suggest that the plan was not performing well. It is performing exceptionally well, which is built upon good investment results over time, really good governance through the Board of Trustees, and trusted partnerships within the plan itself. To speak to compensation directly, the board, the Vestcor board, regularly reviews the investment and pension administration performance, and we are accountable to both the Vestcor independent board of directors and our clients. Now, it's important to note that that Vestcor manages over $20 billion, which makes us the largest investment manager in Atlantic Canada and one of the largest nationwide. Our size and scale has allowed us to pursue a strategy where we internalize our investment and pension administration approach, which reduces the need to use relatively expensive investment managers based in Toronto, New York, London, and other places. We're able to do that right here in New Brunswick, and the investment results have been very strong, and we're very proud of the work that the investment team has done over time. Now, because of our size and scale and the level of responsibility that we have, it's critically important for us to hire and retain the talent needed to generate long-term performance. We need people that have the track record, the experience to handle a very large investment portfolio. And we do have a board of directors that is deeply committed to ensuring that we have strong compensation frameworks that are built on best practices. And that's supported by regular reviews and expert third-party studies that go directly to the board of directors to ensure that our compensation practices are consistent and competitive with that which we see in the pension and investment industry. I appreciate the question.
Thank you very much, Sean, for clarifying that and for being so open and honest about it as well. The next question was, when speaking to the size of the plan financially, is there any significance to hitting the 10 billion mark? Does that open access to new investment opportunities, for example?
It's a great number. 10 billion is a wonderful number. Great to see the investment approach continue to add value over time and continue to grow, supporting the sustainability of the pension. And there's no particular significance with the $10 billion number, but it is a part of an overall investment ecosystem, which is well in excess of 20 billion. And we do find that the scale of the operation at 23 billion continuing to grow does open all sorts of investment opportunities to the internal staff here. And it's something that we've been thinking about from a resourcing perspective, from a investment strategy perspective since 1996, when NBIMC was originated. We're entering our 30th year through Vestcor and predecessor entities, and we're really excited about the investment opportunity set that we have for our investment team and the size and the scale of the approach. Appreciate the question.
Thank you so much. And to add to that as well, it's important to remember that this number informs the funded status of the plan. So as this number grows, the plan becomes more and more funded. And so that's another piece that was shared during this meeting, is just where that has reached. So that sustainability of the plan is incredibly important. An additional question, can you speak to COLA versus the CPI disparity? While CPI is inflation rate, actual COLA, or true cost of living, is generally a lot higher. So how does this equate?
Yeah, certainly. And the board's external actuary could also add some information on this. However, the plans in Canada are limited in how much cost of living they're able to afford or provide their members and pensioners, and they're limited by the Income Tax Act. And over time, the plan cannot exceed the broad measure of CPI as for cost of living adjustments. And so while there might be some other measures, this true cost of living measure that the member mentioned is interesting and could be very real. It's not permitted to use that as a basis under Income Tax Act rules. So the plan is limited in its scope. I will say that unlike some other plans, many other plans, this plan's ability to provide regular cost of living updates has been a real benefit, and it's been a full cost of living since 2014, which has been a tremendous benefit to members and to pensioners.
Thank you. And for anyone curious about what that CPI is, that Consumer Price Index, if you search that, there's great information through Statistics Canada on their website that really explains what CPI is and how it's calculated. We receive often questions from members asking how we calculate it, but the reality is it's not a number that Vestcor, the actuary, creates. It's something that is available on a national basis through Statistics Canada and other federal agencies. Well, thank you so much for your time, Sean. We really, really appreciate it. We're going to have follow-up videos with Yves Plourde, the actuary of the plan, and with Kent Fries, the manager of our member services team, to answer the rest of the questions. But thank you for your time and your openness in answering all of these questions.
Excellent. Well, thank you for having me, Liz, and it's appreciate to connect on this, and it's a very important topic. Have a nice day.
Thank you.